Hello, this is James Smith at Gannanalysis.net, my website, Gannanalysis.net. And if you look at this chart, we're looking today at Berkshire Hathaway, BRK.A. My question to you, what if traders front-run Buffett knowing he will be forced to sell out a big chunk of that Apple position or risk massive underperformance by BRK as Apple loses more than half its value in 2024? That could happen. Why? Because we have a 90-month cycle that called a high back in August, 180-month cycle called a high in September. Remember, the high was 566,000 and change. Well, what if it goes all the way back to 70,000 to retest the March 2009 low? That would be about an 87% correction from the high. Now, that might sound silly and stupid to you, but what I'm saying is the 90-month cycle is not a cycle you ignore. That's a Gann cycle. Now, from Warren Buffett's position, don't try to time the market. That's what he's going to tell you. But I'm saying when it comes to his fund, you better time the market because it's starting to go down now. And remember, he owns a huge chunk of Apple. Apple got crushed on today, on Tuesday. As we start the new year, Apple is getting crushed. The question is, what happens? Will Warren Buffett panic and sell out that huge chunk of Apple, causing the stock to crash even faster? Or will small traders and investors dump their Apple stock in front of what they perceive to be a big sell-off, knowing that at some point Warren Buffett will be forced to sell as well? It could happen. Now, I know he says buy and hold, but I also know he's 93 years old. He may not want to go out with this being his lasting legacy, owning too much Apple and seeing it drop over half. Now, even if it doesn't do that, let's say the 2x1 line, the green line here, you take that out at around 434,000. If you do that, you're going down to 253. You go from one to the next. So if this support, you can see it held back here, but if it gives way, you're going down here. And you can see back here it was support, the 1x1. If this gives way, then you're going down here. And so on and so forth, all the way down to 70,000, retesting the March 2009 low. Now, that might be a bit of a stretch. You might say, hey, there's no way that Berkshire is ever going to sell off 87%. But wouldn't it be better, or more cautious, if you will, to sell out up here than to sell out down here? Now, I know if you're a a Berkshire Hathaway follower, basically a Warren Buffett fan, you will probably hold it until it gets down here, and then you'll throw in the towel and sell. But if you have any common sense at all, you would sell up here, knowing that, hey, you've already made a pretty decent profit holding this stock for many, many years. Remember the old expression, bulls make money, bears make money, pigs get slaughtered. You have to ask yourself, are you a pig if you're holding it up here, knowing that the 90-month cycle and the 180-month cycle are calling for a top? Even if Warren says don't time the market, I really think that's a big mistake. I think you should be timing the market. And remember, when this stock goes down, it's a function of Apple. So if you see Apple getting crushed 3, 4, 5% per day on a regular basis in the next few days, well, guess what? Berkshire has to go down because that's a big part of this fund. So I think there will come a point where common sense will prevail. Warren Buffett will be selling his Apple stock if he's not already doing it now. So if that happens, this could easily give way at this level here, 434. and you could go down to 253 or lower. So I think it's an exciting time to be doing Gann charts, and this proves the value of Gann versus fundamentalism. If you're a buy and hold trend follower and you believe in fundamentalism, that's fine. You made a lot of money. Guess what? Now you're going to give it all back because you didn't believe in timing the market. You don't believe in the 90-month cycle or the 180-month cycle. You believe in Warren Buffett. Well, good luck with that. Let's see how that plays out.